You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group and co-hosts Uncle Mike TOSAW from St. Charles Wealth Management, Mark the Greasy Meatball Sebastian from OptionPit.com, Andrew the Rock Lobster GIOVINAZZI from OptionPit.com, and Henry the FLOWMASTER Schwartz from CBOE. The Option Block is brought to you by CBOE. CBOE's suite of S&P 500 index options, SPX and mini S&P 500 XSP options, allows traders to speculate on the direction of the market, generate income, and hedge for downside protection of their portfolio of stocks. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/SPX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of CBOE Global Markets Incorporated or any of its subsidiaries, collectively CBOE. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the CBOE products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle. And now, get ready to hit the Option Block.
All right, everybody. That music means we are back once again. It is Thursday. It is noon Central. It is 1 p.m. Eastern. Do you know what's popping off in these crazy markets? Well, let's find out together, shall we? Because it is time for the bi-weekly options feast. That is the Option Block, what the cool kids call the old OB. My name, of course, Mark Longo from the THE OptionsInsider.com, as well as from the network upon which so many of you are just mainlining these days. Go ahead, keep mainlining. It's okay. It's not addictive. Well, mostly not addictive. It might get addictive if you keep going. Okay, maybe it's very highly addictive, but we like it. It's a good kind of addictive at the end of the day because you're learning something, you're picking up an activity, picking up new skills, all sorts of fun. Again, coming up in January, it'll be 17 years. Crazy, crazy town, how long we've been doing this crazy thing. Back when podcasting was just a glimmer in Steve Jobs' eye, pre-iPhone, of course, way before anybody else was doing this business. We were saying, hey, maybe there's something to this whole podcasting thing. Let's talk about options on a podcast. And bam, the rest is history, as they say, listeners. So make sure, A, you're getting the full network. B, if you like what you hear, this show, anything else you like, throw a star, like, a comment, whatever your platform. There's so many of them now. You lose track of all of them. But make sure you leave a rating or review. It does help new people discover the content. And, of course, if you want to discover more content for yourselves, you want your week to continue beyond volatility views on Friday, you want to get some options oddities, you want to get awesome pro Q&As, and a whole bunch else, theoptionsinsider.com/pro, the place to go to learn more. As we go around the horn, see who's joining us here today. First, let's go out to the frigid shores of CBOE East, on the shores of the Hudson there, where we are joined once again by the FLOWMASTER himself, Mr. Henry Schwartz, from the aforementioned CBOE East. Mr. FLOWMASTER, welcome back to the show, sir. How are things on the chilly shores of the Hudson?
Everything is good out here. We actually had our New York office Christmas party last night, holiday party, which was fun. Dave Housen, our president, and Fred Tomczyk, our new CEO, were there. There was a magician, and there was a fortune teller, and there was a photo booth. So it was kind of amusing. And one thing I just noticed, I know they put in this special disclaimer to offset whatever I was talking about and disavow any risk, but throughout the whole disclaimer, they say CBOE, and we don't go by CBOE anymore. We go by CBOE Global Markets, as you correctly said. And it's funny to me that I'm sure we commissioned the disclaimer, but it's CBOE Global Markets. It's not the initials anymore.
Hey, I don't write the disclaimers. Blame your lawyers, sir. I'm not the one putting the disclaimer. I'm not one reining back the FLOWMASTER. I'm here to unleash you, sir. That is my job at the end of the day. Let's see who else we can unleash on the old show as we keep on rolling. Let's go away from the shores of the Hudson and up to the even colder, more frigid shores of Maine, where we are joined once again by the Rock Lobster, who I do believe is in the depths of winter and has no heat. Mr. Rock Lobster, will you survive another day?
Yes, it was amazing how high the bill went to fix our heater when it became, 19 degrees out. It went from, we'll do a service on your heater to, you got to replace this and this, and it's going to be $6,800 or something like that. So that's kind of where we are. So we're just running on the coal stove like a bunch of savages and blah to the freaking heater. There we go.
Like a bunch of savages indeed. And joining us last but not least, of course, from the mobile office yet again, maybe we'll get a glimpse into his roaming location, where we are joined once again by the uncleest of Mikes, Mr. Uncle Mike TOSAW, making a rare appearance outside of his beloved St. Charles. Mr. Uncle Mike, welcome back to the show. How goes the Uncle Mike road trip palooza?
So far, so good. I'm just going down I-5 right now, heading into San Diego to visit a client, and nothing can stop me from the option block. Not even, beautiful, sunny Southern California. Nothing's frigid here at all.
That's a dangerous area to be driving through. Whenever I drive through that area, La Jolla, right north of San Diego, into San Diego, I always say to myself, maybe we need an options insider west. Then I look at some of the real estate prices out there. I'm like, I think I'm okay. But I do always have that thought. A very dangerous area. Instead, let's steer clear, listeners, and head right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, the portion of the show where we break down what the heck is trading. And after it seemed like a little bit of uncertainty out of the blocks, we got the markets now firmly in the green. Coming in to start the show, we have the S&P up over 0.75%, about 0.8%. And the NASDAQ up over 1%, closing in on 1.5%, right around 1.4% right now. So the NASDAQ firmly has the bit in its teeth. And the Dow, kind of the laggard today, up only 0.25%. And you know what, as we are wont to do these days, let's add the old Russell 2000 into the mix, because you can't really get a full and complete picture of the market these days unless you're also talking about small caps, because they've just been on their own mission of late. Today up about 0.6%. So that slots them in squarely right behind the S&P 500, but above the Dow today. So an intriguing day, kind of across the board, a green day across the board. Depends how much green you're getting, depends where you hang your hat out there in the markets. That means our vol friends are mostly kind of unched to down slightly. We have VIX coming in to start the show. We were at about exactly a 13. That was down about 0.25 point from the Monday show, threatening that 12 handle, but not quite there. I'm sure if I re-racked that now, it might be a different story. A VVIX 86 down about 3 points on the week. VXX 1710 down about 0.25 point. UVXY 985, so shy of the 10 handle. Is it reverse split season again? I suppose we'll find out. Down 0.15. That's what happens when you do meager reverse splits. You have to have this conversation every couple of months. SVIX 34 3/4. My goodness, how the SVIX has been on the rampage again. Let me just look here really quickly. What is the all-time high? The all-time high, we're pretty close to. I thought we were 35.09. So not that far away from the all-time high in SVIX, listeners. That puts it up about 0.4 of a point from the Monday show. And UVIX 1710 when we commenced operations, down about half a point from the Monday show. All right, a lot to unpack. Let's go around the horn the way we started. Let's go back out to the hallowed halls of CBOE East, where the FLOWMASTER is recovering from his holiday party extravaganza. First off, I want to see the photo booth photos, so put some of those in the live chat. And then B, sir, what else is catching your eye in the markets today?
So I've spent a couple days pulling together some kind of preview year-end stats. I would say right now market conditions are kind of a little bit kind of average. We've seen markets obviously, done very well this year. We had a little bit of a sell-off. We came back from it. Things have been a little bit choppy, but you're also kind of getting into the year-end. People are starting to get done with their year. But I did pull together some top 10 of the year single stocks, ETFs, and index products, and just kind of what the changes were. And it won't be any surprise to you or your listeners, the top 10 for single stocks are things like Tesla and Apple, NVIDIA, Amazon, Meta, that kind of stuff. But interestingly, Tesla option volume's up 44% on an average basis this year, while Apple's down 25% and NVIDIA's up 61%. So, it's been a little bit of a change. I mean, you remember Apple for probably about 8 years running was pretty much the most active every single day. And, Tesla, I think we're looking at Tesla average daily volume this year has been around 2.3 million contracts a day. Apple's barely a million. So that's a big difference. And then in the ETF world, it's things you've heard of like SPY, Qs, IWM, HYG, but the number 5 is TQQQ and number 7 is SQQQ. Both of those seeing SQQQ seeing a jump of about 50%, TQQQ down a little bit. So, and then when you go down to the index world, the fact that 0DTE has just been the hottest thing since sliced bread. SPX volume up about 30% year over year. VIX volume up 41%. And XSP, which is our mini SPX, that average daily volume is up 80%. And I think I've mentioned before, I expect XSP to kind of continue to pick up steam. We're marketing it, and also people that hold SPY are discovering it and starting to use it for overwriting, which will actually be a qualified overwrite, meaning if you have SPY, you can sell XSP calls, and they're considered covered soon. I think we're waiting for some sort of rule clarification, and the brokers have to digest that. But that's kind of what's going on. That's what I've been paying attention to, as well as kind of some interesting moves in the market.
We always love a little bit of the FLOWMASTER's year-end palooza. Stay tuned for more of that fun stuff coming, I'm sure. Listeners, in our final month, crazy to say out loud, final trading month of the year. Man, this year has flown by in many aspects as we keep on rolling back up to coast, where in between sojourns on this show, he's hurriedly throwing and frantically throwing new logs on the fire to keep himself warm and keep all his machinery from freezing up. Mr. Rock Lobster, sir, before you go stoke the fire again, what's catching your eye out there in the markets?
I would just say, Henry, for XSP, we a lot of our students like it. What they don't like is when the markets go wide. I don't know if they're pinned to some weird underlying, but maybe the CBOE could do something with the how they disseminate, how XSP gets disseminated. But that's a sidelight. But people like it because it's cash settled and it is like SPY. So it is popular, but that is an annoying feature when you have stops and stuff. What am I noticing today? You know what? I missed the notice on why is tech hot again today. I thought we had the big unwind going on and da-da-da-da-da. But all of a sudden, big tech is hot again. Apple traded $195. It's up $2 today. Everything was looking kind of ugly for big tech, and then all of the all of the animal spirits came back. So I was a little curious about all that and how that's going to play out. So if anybody has any great ideas, I would be all ears on that.
I think it's just TOSAW. TOSAW's buying it all again. You know, he's on his road trip. He's free from St. Charles. He's just saying, lift every offer. I want it all. You know him. He couldn't get enough Apple back in the day. And now that it's near 200, he can't get enough this time either. As we go on out now to the mobile office, he's in one of my favorite parts of the world. Make sure you stop down there on the little boardwalk area of San Diego. Hit that little amusement park. Get some tasty Dole Whip, dairy-free. It's pretty cool. Hang out with the seals. All sorts of fun. But in between doing that, Mr. Uncle Mike, sir, what is catching your eye out there in yet another Uncle Mike type of day?
Well, I think right now, first off, my idea on Apple, don't put any options into it. Buy the stock, sit on it, hold it. That's my big idea with Apple. We are actually using Apple as a covered call. I mean, Apple, it's very difficult to have any type of market exposure if Apple's not in it. We actually do have Apple in our triple income portfolio, so we are selling covered calls on it. We've been very fortunate with Apple in that we've been able to sell call spreads against it on its way up. Right now, unfortunately, we are in just a straight call, but that's the way it goes in the covered call world at times. But we also have it in our growth portfolios, and it's a bit, like I said, it's very difficult to do any type of market exposure if you're using individual stocks and not have Apple be a part of it in some way, shape, or form. I think right now the question we need to ask ourselves from a technical standpoint of the S&P, are we going to make another run at 4,800? Is that something with which the craziness of and I don't know if it's necessarily craziness, but the intensity of the rally with which we had in November, can we get enough buyers to make a run at 4,800 by the end of this year? And the all-time high for the S&P was on the first day of trading in 2022, and of course markets did not do so well after that. But can we make another run at that? Will Santa Claus be that generous this year? And that's the question that a lot of our shorter-term traders need to ask themselves because of the fact that are we in enough? Do we have enough momentum to keep it going, or are we at the top right now? Are we at what you could consider a double top? That's what I'm looking at right now. Besides that, the long term, things are going to be good, as me being the long-term goal with which I am, and that's what I'm seeing today.
In addition to all those fine seals out your window there on that nice drive down to scenic and sunny San Diego, let's see if these markets are scenic and sunny, at least from an overall options volume perspective, listeners. And the answer is kind of. Yeah, it's a decent day, all things considered. Let's start off in VIX land, as we are wont to do. A little bit shy of 300K on the tape for VIX options right now, about 288,000 on the tape. It's respectable, especially when you consider that the ADV has come in quite a bit, about 300,000. It was right around 950 at its apex a little while ago. Now it's down to about 665, so 288. It's respectable, I will say, out there in VIX land. SPY, 4.9 million. That's pretty robust. Usually we expect to see SPY 4.3, maybe 4.5 on a decently active day, closing on a 5 million already. That's nothing to sneeze at. In SPY land, the ADV right around 7.25 million out there. The S, as the FLOWMASTER alluded to, putting up some numbers, 1.93 million contracts on the tape out there against an ADV of about exactly 3 million contracts a day out there. So the S, once again, putting up some numbers. 3 million contracts a day, that would have been just insane volume not too long ago. And because I'm a glutton for punishment, listeners, I'm going to do it again. I'm going to run my favorite report in the FLOWMASTER machine and see less exactly of the top 20 in SPX, most active contracts right now, listeners. Once again, all 20 are expiring today. I don't know why I keep doing this. I'm a glutton for punishment. I know what the answer is at this point. It's always 20 for 20. But once again, of the top 20 most active contracts in SPX right now, all of them going the way of the dodo today. If we go to the top 40, I see 2, I see 4, 5. Actually, it looks like about 8 or so in the top 40. So that's actually a little more than I expected. Usually we top out somewhere between 3 to 5. So roughly 8 or so expiring. Not today. It may sound like, what's the big deal? But that's actually a lot. So intriguing out there in SPX land. But again, it also just shows you how zero-day biased this product has become. Small caps, IWM, 489,000 contracts on the tape. That may sound like a lot, but the ADV is still almost 1.5 million contracts. So not even a third of the way there. It doesn't seem like we're going to hit that today. And the Qs, 2.33 million. The ADV, a little bit shy of 3.5 million, about 3.4 million in Qs land. All right, to the single names we go. And is it a banger day in single names? The answer is also kind of. I'm damning all these markets with faint praise today, listeners. But the kind of is appropriate. We're at 251,000, so just a little bit north of 250,000 contracts to break into the top 10 today. That's nothing to sneeze at, especially since we've been roughly 100K lower, also 100K higher in the past. So right kind of in the middle of the range today. So that qualifies as kind of. That gets us to KenView, a.k.a. ticker symbol KVUE. I haven't talked about this one in a little bit. They were hot when they got spun off at J&J. They were formerly the consumer healthcare division of J&J. We saw a lot of merger arb going up with this name between this and J&J. So they were both fairly represented in our top 10 for a little while. KVUE has now fallen off, but they're back there today, trading $20.62, up about $1.25, a little over 6, about 6.3%. So nice pop for them. And the number 10 spot, 251,000 contracts. Number 9, this is interesting. It's GOOG. Notice I did not say GOOG-L, a.k.a. Alphabet Class A. This is the old school GOOG Class C. We don't see them in our top 10 too often. Usually it is the Class A. But number 9, we have coming in the Class C, 297,000 contracts, trading 138 3/4, up about 7 1/3 today. So nice little pop for old school GOOG as opposed to GOOG-L. Number 8, we've got the artist formerly known as Facebook. It's Meta, 316,000 contracts. 927. It's up 9 points. 327 1/3 is where it's trading, up nearly $10, 987, or a little over 3, about 3.1%. I'm with the Rock Lobster. I missed the memo on, hey, everyone's got to buy tech again. I guess the sell-off in the Magnificent Seven is over. It was short-lived because, man, they are all on the rampage today, including number 7. It's the Amazonians. The Amazonians coming in early on our list today. 336,000 contracts for them. Amazon, 147 and about a half, up nearly $3 or about 2%. So a nice little pop for them. Again, all these NASDAQ names catching a nice little bit out there, including number 6, a name we haven't talked about in quite some time. Maybe we'll talk about them again in a little bit. Spoiler, listeners. This is NKLA Corp. You know them, you love them, maybe you hate them. The much maligned electric truck manufacturer out there. Trading a whopping 79 cents today, off nearly 20 cents or off about 20%. So a rough day for good old NKLA. They were trading a little bit north of $1 for most of this week and now breaking the buck in the wrong direction. Of course, they've been plagued with all sorts of issues and scandals over the years. But apparently breaking the buck is what was the catalyst for just lighting up this options tape. Now, this goes back to the old stalwart of how cheap is too cheap to trade the options. I think we might come back to this one, and maybe we'll have an answer for that. But right now, number 6, NKLA, 387,000. Number 5, keeping it in the N names, listeners, it's NVIDIA, a.k.a. the name everyone can't get enough of these days on the AI front. Coming a little bit early today. Number 5, 611,000 contracts. NVIDIA back up 8 1/3, nearly 2%, trading 463 and about a third, listeners. And again, good for number 5, 611,000 contracts. Number 4, we were just talking about them. It's the aforementioned Alphabet Class A, a.k.a. GOOG-L, taking the number 4 spot with 643,000. Look at that difference, listeners. Shy of 300K for good old GOOG. GOOG-L, 643,000. Look at that difference in options interest between the two. That's fascinating. Alphabet Class A, 137 and about a quarter, up about 7 1/4 on the day today. Number 3, we're just talking about them as well. Going back to the A tech names, it is the Fruit Company, 661,000 contracts, trading 194 and about a third, up about $2. So Apple, man, putting definitely in the rear view that 170 level that it broke not too long ago. How long ago was it shy of 170? Looks like it was down the week before Halloween. So hasn't been that long. It was 166.89, now 194 and about a third. So nice rally. Again, most things have rallied post-Powell, but I won't say all, but a lot of these big Magnificent Seven names certainly. And again, good for number 3. Number 2, look at the chip zone just inverting today. NVIDIA at number 6. That means number 2 is AMD. AMD on the rampage, 126.5, up about $9.70 out there. Of course, they're trying to dip their toes in the AI water as well, saying, hey, forget about NVIDIA. What about us? We have our own quote-unquote AI chip. And that was enough to send them up about 8 1/3% today, or 970, trading 126.5 right now. Also good for 1.14 million. Man, it's been a while since we've seen that kind of paper out there in what is usually the bottom half of the chip zone. Number 1, you know what it is, listeners. It's Tesla. Almost 1.5 million contracts on the tape. So Tesla, once again, saying, hold my beer, kids. I'll show you how it's done. Almost 240 exactly, just ticked a little bit below it, 239.95, up about 60 cents. So net, not a huge day right now, but actually, if you look at the low, it got down to about 237, and the high was 244, so a little over a $7 range on the day out there today. Right now, kind of unched, but again, good for 1.5 million contracts out there in Tesla land. Labor troubles in Europe. Every day there's drama with Musk and something going on over there. But again, good for drama equates to options volume. That's what we're seeing out there again today. In terms of earnings, we still have some stuff on the docket. We had NEO this week. We had Dave & Buster's on Tuesday. We had everyone's favorite. I know the FLOWMASTER loves it. It's Ollie's Bargain Outlet on Wednesday, as well as Vera Bradley and some name called GameStop. I'm not familiar with them. Today we had Uncle Mike's favorite, Dollar General. I'm surprised he's traveling on Dollar General earnings day. It's usually a bit of a holiday for him. Sienna and Broadcom, and they have sheer yoga pants infamy, Lululemon. So a lot popping off. Luckily for you folks, we have updated earnings move results, and earnings season reports. Let's look really quickly at GameStop. They were, yesterday, like I said, after the bell, they were at nearly $15, $14.84. They were pricing in, get this, listeners, 18.5%. We all know GameStop. We all know that at the end of the day, any vol level could be seen as appropriate in GameStop, given the scenario out there. At the time of this report, when we ran it this morning, they had only moved 3.5%. So they had underperformed that straddle dramatically. And that is still the case. They only moved about 3.2%. So this might be one of the premium rights of the season right here, listeners. Wow. And then Dollar General, they were this morning before the bell, they were at about 134 going into their announcement. They were pricing in about 8%. And once again, they underperformed. They delivered about 1.5%. Right as we ran this report, and right now we re-rack it, they've only moved about 0.5%. So another screaming premium sale. Wow, that's kind of bucking the trend because our season is mostly moving the other way. We've got Lulu after the bell. They're trading around $4.60 right now. They're pricing in about $28, a little bit shy of that, $27.70. In the past, they've moved nearly $33. So Lululemon bucking the trend as well, pricing in a little bit less juice. We've got Oracle coming up next week as well. 112 is where they were trading. They were pricing in $5.92. In the past, they've moved $5.93. So they are keeping things right in line. No change for them. So check out all that data for yourselves. If you did that, listeners, if you ran that report this morning, you would see that the season is hanging out right now at 120%. That's a banger of a season. That's crazy. Again, our long-term average right now is about exactly 100%. So that's dramatic outperformance. I don't care how you parse it. So again, that shows you we've seen a lot of names pricing in more juice this season, and a lot of them have delivered. This morning, the rare exception with a couple of those ones I just read out. Other than that, it's been a banger cycle. So we'll keep an eye on that as we keep on rolling. It's time for a banger episode, a banger segment of the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. That music means it's time to get weird. It is time to get wild. It is time to unleash the eye of Sauron and indeed the eye of the FLOWMASTER. See what they can collectively fix their gaze upon today. Let's start things off, listeners, in a name we haven't talked about in quite some time. This is MetLife Inc., ticker symbol MET, M-E-T, trading 63.5 right now, kind of unched on the day. On the year, bit of a different story, off about $11 or nearly 15%. They were trading 74.5 about a year ago, so you could see where that sell-off has come from, listeners. They hit their low in June. Looks like it was around almost a little bit shy of $50, $48.95. Yeah, that's ever since then, ever since June. It's been a nice little comeback story here. So if you look at it just from the last 6 months, they're up about nearly 16% or nearly 9 handles. So again, kind of a glass half full, glass half empty kind of story. But Mr. FLOWMASTER, looks like you noticed some interesting upside going up out there today. What did you spot out there in everyone's new favorite, MetLife, sir?
Sure. So I noticed it because it was just in terms of outright volume, it was 5 times normal, 18,000 calls against 500 puts. And, usually I'm kind of conditioned to go look for this like super speculative bullish flow because I think that can be fun to try to trade or make sense of. In this case, there were almost 14,000 of the February 67.5 calls that traded. That was the bulk of the activity. Higher, like a 106-ish, and then 14,000 traded for 101 in a block. And so this is actually a big opening call seller. The strike is about 6% above spot, expires in just over 2 months, and it's a $1.4 million trade, and it's opening, and it's a lot larger than the average daily volume, and there's only 1,700 contracts on the call side. So, kind of as you said, the stock's been kind of, has had a decent range this year. And, you get into kind of December and, people are kind of doing their year end, tax loss harvesting and just kind of reassessing. And so in this case, it looks to me like somebody's kind of said, well, I'm in pretty good shape, up to that strike, the 67.5 strike. The stock has been higher, right? A year ago, it was at $74. So they seem to be basically, pretty happy taking $1.5 million, almost $1.4 million in exchange for giving up that upside. And it made me think of one thing a colleague of mine, Jody Gunsberg, who's our head of index partnerships, was on Bloomberg talking about how, kind of in the current interest rate environment, the sector selection matters a lot, right? When interest rates were 0, people kind of bought almost everything. Interest rates at 5% is a different game. And she actually pointed out the financials were not a wonderful performer in kind of this higher interest rate world. Now, it may differ a little bit if you kind of separate out insurance names versus banks versus, fintechs. But just a big call seller opening, kind of, one of the most classic uses of listed options is, just overriding a big position.
Yeah, I'm with you. We tend to usually gravitate towards the fun, sexy, bullish upside stuff because the listeners like it. It gets the blood pumping, gets everybody excited. But sometimes there can be useful information in these size overwrites as well. Mr. Mr. Rock Lobster, sir. Anything catching your eye out there about somebody blasting away at the upside in MetLife?
Blasting away on the upside in MetLife. Is that something that we hear very often? Like blasting away on the upside of MetLife?
Not on this show.
You know what? I seem to recall that, like right around hurricane season, I guess MetLife really isn't a property casualty insurer. But I guess we're sort of running, we're kind of past hurricane season now, right? And I remember just general insurance when they, vol gets higher and they sell more calls. But I mean, I could see why, he said no stock. I mean, I could see why somebody would sell those calls. I mean, it's not, I don't think it's terrible. But I think like if you're a pension fund and you need $1.5 million, what the heck? Raise the money and get rocking. So I don't think it's a bad, I think it's a bad trade. I mean, Met's not really a big mover. It pays a dividend. So not a terrible trade. I mean, that's income. Income does count.
Well, speaking of terrible trades, let's get to the next one that caught the FLOWMASTER's eye. These could certainly be qualified as potentially terrible trades. Go back to a name I just talked about, listeners. It's GameStop. We just talked about their earnings report and how they were a great premium sale, at least so far. Trading 15 and a quarter right now, up about 40 odd cents or nearly 3%. You know the drama that has been GameStop. A year ago, they were 22 and a quarter, so they're down exactly $7 on the year right now. They've sold off a few times. Their high came in June of, about 27 and 2/3. So obviously they have come down quite a bit from there. Even though they have rallied a bit over the last few weeks, they were a little bit shy of $12 just at the end of November, and now they're 15 and a quarter. So they've had a nice little pop over the last month. So again, kind of a bit of a glass half full, glass half empty. Over the last month, they're up about 12%. So depends where you're looking, what your frame of reference is. And Mr. Flowmaster, though, this one, I have to admit, this one did bring a smile to my face. You know, we're used to some nonsense paper out there in names like GameStop, but this might take the cake for the most nonsense of all, sir. What did you find?
Well, yeah, I think everybody that's been watching markets for the last few years knows about GameStop and the meme craziness of 2021. It's still interesting to talk about, but so the most active contract for the last couple of days, or at least in the top two, is the January 127.5 calls. And we're talking about some pretty decent paper, like, 11, 12,000 contracts a day being bought to open. The open interest is building out there. These things are 700% out of the money. The stock did kind of spike up to, I don't know, did it get up to like the $500 range briefly in 2021? We've seen weird things, but the most interesting, and it's basically the buyers usually paying like 11, 12 cents. I think today, what did they take? Today they paid 11 cents, around 11 cents. So, this is a weird one. And the funniest thing of all, and you don't have to be a super smart options trader to know how to make some money on this, is sometimes when they pay for those 127.5 calls, the lower strikes are offered cheaper. So yesterday I had a friend who was buying the 60 calls for 11 cents and selling the 127s for 11 cents. So, it's very, very far out of the money call spread. And if you have, commissions to pay or transaction costs, you may not want to buy a ton of those spreads, but it can only be positive, zero or positive in terms of valuation. And there's no margin required to own a vertical spread. So, we've seen this in when we get into these hyper speculative kind of little pockets, we see that call wing, this inverted skew, right, where people are just, paying what we would normally call kind of crazy levels for this upside. But remember, during the meme stock craze, we had stock crashing to the upside, and Dean Kernot at Macro Risk is the first one to say, like, it's not a crazy skew if the actual performance of the asset jumps to the upside. Usually we worry about stocks crashing, but so I don't know what to say. I think open interest is around 63,000 contracts in these now. Today it looks like they actually only had to pay 6 cents to get them. So some other people are jumping into there, but one thing still kind of sticks in my mind from meme stock time was when we were seeing day after day just kind of crazy buying of GameStop calls. Thomas Petterfy was interviewed, and they asked him about, what do you think about this? And he was a little concerned because he said, you could potentially have a situation where you can't get enough stock to settle. And so, it's not rational, and it has nothing to do with valuation, but valuation and price don't really have much of a connection on a day-to-day basis, right? So it's just kind of a funny one. If you think this is free money, then they're very easy to sell. And like I said, I think there's some opportunities to get into vertical call spread dirt cheap, possibly even for no money. And that's a good trade for anybody who knows what they're doing.
I was going to say 11 cents. I mean, where did they get their theoreticals from? That's horrific. It's sold to you all day long. I can figure out something between 15 and 124, I think, to hedge that. But my goodness, yeah. This might be a contender. I hate to have it come so late in the year because people are going to say we're recency bias. This might be a contender for just one of the worst trades of the year that we've seen in all the activity we've been profiling. And we've profiled some doozies. 11 cents, you're right. They're only going up for, and I say only in air quotes, they're only going up for a paltry 6 cents today. The fact that there's 6 cent bid for these 127.5 listeners, we're not even talking, I could maybe see an argument for, I don't know, Jan of 2026, something like that. Give yourself some time. These are regular Jan. These are going away in about a month. It's just, I don't know, Mr. Rock Lobster. It might be hard to supplant this as our most ridiculous trade we've seen of the year so far. We have a good list of them in our back catalog that I was ready to break down at the end of the year, but we may have a new contender. What do you say?
I mean, I think what's funny is I just put out the tweet like, what was it, 2 weeks ago in Oatly? You know, you don't buy the 5-level calls for a nickel when you can buy the 2s for a nickel.
Weren't they buying the 10s? Weren't they buying the 10s for like a nickel?
Oh,
so what's worse, the 10s or these?
it was a strike that made you do the happy dance. That's all I know. But this one is pretty classic is, you know, because something happened once long ago in crazy times, that it's going to happen again. Now, Henry, I like what Henry said, what Pettifee said about, you know, settlement issues and all kinds of problems. So, you know, when there's mechanical issues in the market, that can do really weird things to option prices. And I think that's why we got a lot of that meme craziness. So I think this person, though, is paying up for these calls. You know, I wish him luck. But I think Henry's friend that did the spread for even is probably, you know, he's got a better shot at winning, I guess.
Yeah, that could be the winner of the year, getting a free 60-odd handle wide vertical in GameStop. Yeah, I think most people will take that. All right, speaking of weirdness, Liz, I thought this might take the cake for weirdness today, or just silliness. But it looks like the FLOWMASTER may have stolen the thunder. We shall see. I just mentioned earlier, listeners, everyone's favorite NKLA. This name just taking a drubbing, breaking a buck today in the wrong direction, trading 78 cents right now. On the year, it's off 67%, or $1.63. It was trading 241 a year ago, and the high actually came all that August frenzy. Remember, we were talking about some upside call activity in this one. It was Rivian. A bunch of these were hot again, and it got up to $3.71. It has come in almost exactly $3 from that level now. So how the quote-unquote mighty have fallen. But Mr. FLOWMASTER, today's paper kind of brought back a little bit of shades of the old Tesla catastrophe puts. You remember these when Tesla was trading around $1.50 or somewhere around those levels, maybe 200? Someone was just loading up for size on the one strike and the 10s over and over again. And we used to joke that these were, you know, CDS writers who were just using these to buy these against a complete and utter default and a bankruptcy of the company. These have a little bit of a whiff about those today. We first noticed a 50,000 line. Remember we said NKLA was in our top 5 to our top 10 today. That's a rare thing, so something must be afoot. We're probably going to come back to it. We are now, listeners. A 50,000 of the Jan, at least these are Jan of 2025. We're not talking Jan of this year. We're going out a little bit of a ways here, listeners, to give yourself a little bit of time. But again, it's the age-old question. What's too much when the stock is this cheap? They bought 50,000, or they should say they traded 50,000 of the Jan 1 puts for 52 cents. Again, you're hedging a 78-cent stock going out a year and change and paying 52 cents for the privilege, if that is indeed the case, what they were up to. Again, they came back. They did more. They liked this trade so much, they did a total of 125,000 contracts on the day. Let's see if any more have gone up since we've talked. Yes, even more. Another 50,000 have gone up. A total of 175,000 of these have gone up. Worth noting, they also looks like they opened about 100,000 of the Dees 1 puts. So that's a little bit closer to home. Those, of course, going out next week. So it is just a put palooza out here. Obviously, there are earnings between now and January of 2025 in NKLA, the next one coming in late February. But Mr. FLOWMASTER, I'm curious your thoughts on these as well. Do these give you a little bit of a shade, a nostalgia for the old Tesla catastrophe put, sir?
Well, you know what I'm looking at is there's a 100,000 lot flex that traded in NKLA today. So I think this might be some sort of a spread against listed versus flex. 100,000 of the 80, the strike is 0.80. The D's of 2023, 80 calls traded for 6 cents today. So I don't know what is going on, but I'm actually also looking at it looks like there's a big 1x2 open in the NKLA Jan of 2025 1x2 put spread open. So I do remember the Tesla downside vividly. They were fun to talk about. I'm actually right in the middle of listening to the Elon Musk biography, which is actually a pretty good audio book, and really interesting to hear about how actually there's a lot on his risk tolerance and risk-seeking behavior. I'm not sure what's going on with these. They look like a buyer versus our theoreticals. I'm not sure. My feeling here, it's a 78-cent stock, so I don't know. I don't know what to make of this one.
They are pretty fascinating. We're going to file them in the Tesla catastrophe put adjacent. Would you pay 50-odd cents, listeners, for 1 year and change puts against a 78-cent stock? Does that sound like a good quote-unquote do to you? I'm curious. These also could be filed in some of our fun paper for the end of the year breakdown. Was it against the flex? Did some market maker put something up for size and flex and then turn to the listed to hedge it? Possibly. That could be one argument for why you would do something that on the surface is seemingly so ridiculous. But hey, we've seen weirder things as we're coming up against it, but I do want to get some listeners on, so let's get really quickly to the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. Our question of the week right now is we're just giving you a chance to put your crystal ball hat on, guess where VIX will close at the end of the year. Gave you 4 choices: above 15, 13.5 to about 15, 12 to about 13.5, and below 12. And right now, the 12 to 13.5 level, which, surprise, surprise, is where we're hanging out, is winning with about 43%, followed by number 2, north of 15, so betting on some end-of-year vol spikes, a little over 20%, and a little bit, right around 18% each for 13.5 to 15, and below 12. I sped through that because I want to get to some of your questions. Let's go out here to this one from Adam K. Very timely. He says, hello, OB All-Stars. Well, hello, Adam. He says, long-time listener to the network, although I admit I didn't play your content to my unborn children. Yeah, he's referring to the listener who wrote in, I believe it was to our Options Bootcamp program, and showed a photo of an MP3 player around a pregnant woman's belly, and he was playing our content to his kid. Which is terrifying to have that child hearing my voice, the first thing he hears. But you know what? Could be a good formative thing for him in the long run. But I digress. Let's keep rolling. He says, I saw the article below about short selling in Israeli ETFs ahead of the October 7th attacks, and I thought I'd follow up to see if you saw any suspicious options activity around that same time. This seems to have the same whiff of the infamous Bin Laden puts prior to 9/11. I hope you guys have a great holiday. Well, hope you do as well. There, Adam, thanks for being a long-time listener. He's included a link to, looks like an article from The Economist here talking about this. This has been making the rounds for the last few sessions. A few people have hit us up about this. I haven't had a chance to dive deep into it myself. I'm curious, maybe the FLOWMASTER, who lives on Flow day to day, maybe if he has. But if you haven't seen it, listeners, there was a study, just came out, paper by Robert Jackson Jr., a former commissioner of the Securities Exchange Commission, and Joshua Mitz of Columbia University, analyzing trading activity immediately before and immediately after October 7th. They focus a lot on short selling, so in a lot of various Israeli names, including an Israeli ETF, ticker symbol EIS, which they said the short interest, the short volume exploded the day before the attacks, right around 250,000 shares, which were then bought back immediately the next day for about $1 million profit, which is way outside the norm for that name. They also do, more salient for us though, they do point to an increase in open interest for what they term, I like this, risky short-dated options contracts on his Israeli firms traded here in the U.S. So I believe the underlying flow went up overseas on the Israeli exchanges, but the options flow obviously going up here. So these were weekly contracts. So obviously dated and geared around a very specific time frame. And they talk about two sets of Israeli stocks, one expiring on the 13th and the one expiring after that date, and talk about how they saw some interesting spikes in open interest, including an increase of over 500% on the day immediately before the attack. So it does seem like maybe there was some skullduggery, which, again, as our listener points out, would not be the first time one of these entities has attempted to profit from their actions. Mr. Flowmaster, you're out there crunching the flow day in, day out. I'm sure people have asked you about this. You probably heard this, and maybe you've even seen this research. I'm curious if you have any thoughts for our listener. Who was it? Adam, where was it? Adam K. He wants to know if you've seen any of this flow, sir. If you noticed it for yourself.
I do tend to go look and in hindsight try to figure out if there's any sort of inkling. I saw the headline and I saw that it was overseas stocks, so there wasn't much to look at here. And then I did go look at the ETF. I didn't see anything unusual, like and among like the a lot of the Israeli ADRs are like biotechs and things, and I dug around. I did not see anything. VIX volume, just in terms of trying to do something ahead of a global macro event. VIX volume was heavy that day, but it was actually more puts than calls. So there's nothing that I've been able to dig up.
Interesting. Flowmaster maybe being a little bit of a counterpoint here for this study. Yeah, you're right. I haven't had a chance to dig in myself. Something I'll also point out, a lot of these, options, as Flowmaster mentioned, are not exactly size ADVs on them. So it would be easy to maybe interpret any sort of spike in volume as something. But again, I haven't had a chance to look at them. I'm going to dig in myself. So far, the Flowmaster, who spends day in, day out looking at the flow, saying he hasn't seen anything, which is kind of interesting. So yeah, interesting stuff. I have seen a lot of this data myself. I haven't had a chance to crunch the numbers, but intriguing stuff there as well. But we got to keep on rolling, listeners. We're coming up against it. It's time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block, the portion of the show where we tell you what we're keeping an eye on. We've had just enough time for Uncle Mike to pull over on the side of the road there in beautiful, scenic San Diego and enjoy a delicious Dole Whip by the beach. Mr. Uncle Mike, sir, what are you keeping an eye on for the rest of the week until the Monday show?
Well, I think it's like I was saying at the beginning of the show, watching to see the 4,800 mark, not necessarily this weekend by any means, but towards the end of the year, and then continuing to watch bonds. Bonds are what's really driving this market. Interest rates are what it's all about at this stage. It appears that the Fed has eased off, or at least that's the perception of what they're going to be doing, but you never know. So bonds need to be at the focal point, in my opinion.
Hope you're enjoying that delicious Dole Whip, sir. Mr. Rock Lobster, same question for you. What are you keeping an eye on until the Monday episode of the old OB?
Well, we do have a non-farm payroll number, don't we, tomorrow? And we have a open market committee meeting on Wednesday. So the Fed, they're going to start cutting or whatever anybody believes, which I think is all crap. They're just probably not going to raise anymore. So, I think the market's kind of been sort of feasting on that. So we'll see if they both do. But, everything's kind of in play for the Santa rally here. That's all I'm going to say. And if big tech is going to continue its rally, then I don't know, just watch it go up. TOSAW's idea, just buy the stock and watch it go up. It's going to work, especially right now.
That's the new Rock Lobster newsletter. Subscribe to it now. Buy the stock and watch it go up. By the Rock Lobster.
Sometimes it works a lot.
Why fight the momentum? And Mr. Flowmaster, last but not least, sir, what are you keeping an eye on for you until your next appearance next Thursday?
Well, I'm actually going to be watching GameStop pretty closely because these 127.5s, I think, are just really interesting. And, we do know the power that the retail hordes can have on the market. And then we're doing some pretty interesting volatility work. I actually am working on a matrix of realized volatility from 1 minute to the next out of the SPX. So if I can get it to work, I will show it to you. But basically, the question came up basically, kind of how volatile is the market between 12 and 12:30, or 9:55 and 10:05, right? We know we see dislocations around 10 a.m. when there's economic numbers. So just trying to kind of literally taking the concept of the short dated trading, the 0 DTE, it's such a wave, and saying, okay, fine. So, the next step is going to be, people getting into trades for 2 hours, right? They already are in a lot of cases. And so trying to kind of quantify that, because most of the research, most of the analytics you can get out there are just, close to close volatility, which, we all know it really does not, capture the entire market, especially if you're really trading intraday.
All right, listeners, that music means we've come to the end of another journey through the world of options. Man, what a journey it was. We started off talking about some volume, got into some crazy verticals. I will admit, I will be shopping maybe for some free verticals a little bit later in GameStop, Mr. Flowmaster. You have caught my attention and intrigued me, as you usually do. But that music means we are done, at least for right now. Don't worry, we'll be back in a bit with TWIFO coming up a little bit later on the on-demand side. But before we go, let's go around the horn. Mr. Flowmaster, we'll start with you, sir. If folks want to check out all the cool goodies, maybe they want to analyze some of this flow for themselves using your tools, where should they go? What should they do?
CBOE.com/RMA, which is Risk and Market Analytics. And you can request a trial for any of our platforms. Reach out. We're always happy to help.
There you go. CBOE.com/RMA, the place to go to kick the tires and light the fires. Not just on Trade Alert, even though Trade Alert pretty darn cool. If I do say so myself, I do use it a lot. But you got all kinds of things there. FT options under that umbrella. You got live vol, all sorts of goodies. CBOE.com/RMA, the place to go to begin your journey down the slippery slope of all those tools. Once you taste one, you're going to keep coming back. And Mr. Uncle Mike, as he's finishing up that delicious Dole Whip, sir, where should folks go if maybe they want the Uncle Mike mobile to stop by their house?
By all means. Check out my website, stcharleswealth.com. You can make an appointment. I'll give you a call. We'll talk. If you're looking for a financial advisor who is not afraid of the option product, look me up, stcharleswealth.com.
I do feel for you, sir, having to go all the way out to the difficult environs of San Diego, sir. My heart bleeds for you. A difficult trip, by all means.
It's awful out here.
Yeah.
I mean, it's awful.
Try not to have too much fun while you're out there. stcharleswealth.com, the place to go to learn more. And last but not least, check out his new newsletter. Just buy all the stocks and watch them go up. Mr. Flowmaster, Mr. Rock Lobster, sir. Where should folks go if they want to get their hands on that?
Optionpit.com. Optionpit.com. Check it all out. Check out all my goodies.
There you go. Check them out. Optionpit.com, the place to go. We've got to get on out of here. Back again today, listeners. A little bit different time for TWIFO. Usually it's about a half an hour after this show, mixing things up a little bit. Coming back at 3 p.m. Central. We're going to be joined for our annual check-in by our buddy, Mr. Derek Salmon. He runs all the options over there at CME. So he always comes armed with some interesting nuggets, some interesting data that we can sink our teeth into for the year, what's been going up over there at CME. He always gives us a glimpse or two, a peek into what's coming down the pike for next year. So if you're intrigued by all things futures options, make sure you tune in for that. That'll be hitting the network on demand wherever you get this show. Then, of course, back again tomorrow, noon Central, 1 p.m. Eastern for Volatility Views. And back after that for you pro folks, a little bit of the old oddities. And back again on Monday, another episode of the Option Block. Stay safe out there, everybody.
The Option Block is brought to you by CBOE. CBOE's suite of S&P 500 index options, SPX and mini S&P 500 XSP options, allows traders to speculate on the direction of the market, generate income, and hedge for downside protection of their portfolio of stocks. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/SPX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of CBOE Global Markets Incorporated or any of its subsidiaries, collectively CBOE. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the CBOE products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.